Let's invite our market master, Rahul Singh, Head of Equity Research at Standard Chartered Securities, joins us now. Good morning, Rahul. Thank you very much for joining us. We have this excellent report from you on how investors should look at board quality as an insurance for the minority investor. We will come to that in just a bit. First, your view on the market itself. Why are you concentrating on board quality? Are you getting a sense that on finance parameters, markets are looking a bit overbought? Are valuations looking stretched at all for you?
Well, I think the reason we focused on the board composition or board effectiveness as one of the factors which investors should look at is because I think it's been a completely ignored subject. It's coming more into limelight with the new Companies Act. And also, if you look at the correlation between some of the companies which have got good boards versus bad boards, there seems to be a very good correlation between companies which have paid attention to the boards, have also typically seen much better earnings growth, much better ROE improvement, and more importantly, much better, premium to the market multiple improvement. So therefore, there does seem to be a composition of board does seem to be an important factor in determining the quality factor which the market paid much over the last 4-5 years. So I won't read too much into the fact that we've decided to do this study versus what the market valuations today are. But the genesis of our report is more to do with the fact that we genuinely think it's a factor which has been ignored in the Indian corporate sector, especially because we are 50% of the Nifty companies, 50% ownership is with the promoter group. So boards are effectively in some cases run by the groups very, very strong-headed.
Rahul, hi, morning. So just take us through the list of companies then whose boards score the highest in effectiveness.
Well, the companies which have scored high are companies like Marico, Dr. Reddy's, Axis, Infosys, HDFC. There are some obviously known names there, but there are some surprises too in the companies with strong boards. Similarly, what we found is some of the strong managements which we traditionally know have not paid as much attention to the board quality. The PSUs in generally have had a weak board, primarily also because all of them have the common chairman and CEO roles, which is a strict no-no as far as board quality goes. So that's really the spread, and then obviously you have a lot of shades of grey in between. Companies whom you would think should score high have scored probably not so high. Also, we've looked at 8 different parameters, so we've kind of kept the parameters completely objective and not trying to build any subjective bias in the process.
Yes, I take your point. I'll come to your parameters in just a bit to hear it in your own words. But I'm a little confused. Your highest board scores come in for Infosys. I don't see TCS in that list. Now, TCS performance has been superlative. Why is TCS in the first place not there? And secondly, how much would your own buys and sells be dependent on this in that case?
So firstly, we've instead of getting into company specifics, what we have done is we have made buckets of high scores versus average scores versus below average and low scores. So as scoring buckets, the companies with high scores have done better than the companies with median or below average scores, and this is over a long period of 5 years. So we are not just not looking at 2 or 3 year period. We're looking at 5 years and more. So some of your color on TCS, for example, could be more from a 2 to 3 year perspective, last 2 to 3 years. But in terms of whether this should actually drive financial performance or whether this is the only factor driving financial performance, obviously not. There is a management, there are industry factors, there are regulatory factors, there are competitive factors which drive ultimately the financial and the stock performance of any stock. All we are saying is that, look, board composition is a topic which was hitherto ignored as a factor driving quality premium, I don't think we should ignore it. There is a strong at least evidence to suggest that companies which have paid attention to the board, chances are they have also paid a lot of attention to other things in the business and also other things around corporate governance. Because board of director composition is a very important part of corporate governance and very underappreciated in our view.
Oh, fair enough. That's an important point you make, Rahul. So tell us about the companies which have the lowest board scores, and would this low board score color your investment into the stock?
Well, over a long period it should. Over the short term, over a 1 year period, 2 year period, maybe the fundamental factors driving the earnings or industry factors driving the earnings kind of overshadow these factors. But some of the companies which have scored low, like I said, like PSUs, even companies which have strong managements like BPCL, for example, has a relatively weak board compared to other peers also. We've got other names like Prestige, Jaiprakash. Some of these companies have had weak boards. Even the companies where we have seen the management being very strong, the boards are relatively weak. For example, I would say that for a few names like L&T, ITC, Z, where with all these companies have done very well, and obviously they are doing something right. But on the board front, they have probably not paid as much attention, or it's some of the issues which they have not given enough attention to the board composition issues.
All right. Let's get past the quality of board discussion, which indeed is a very important parameter, especially for longer-term stock pickers, to be sure. What's your view on the market itself? We have seen a fairly decent run-up, new highs being notched up even as we speak. Sensex is at a fresh all-time high, targeting 28,000. Are valuations getting uncomfortable at all? Or when are you calling for a 30,000, for instance, before budget?
Well, cyclicals, the valuations are obviously they have just gone back to the election time level. So I don't think that the expectations have gone to euphoria kind of levels at all. My view is the cyclicals rally could continue, specifically in banks, more the private sector banks and public sector banks. I think banks is one segment where we think expectations around the policy momentum again coming back, expectations around inflation coming off, and hence rate cut expectations getting built in, some probability of that, and also leading up to the budget, where I think the government has the opportunity, and I believe the work has already started in advance for the budget much before normal years, to come out with something which is significantly different from what we saw in July. Which was the first budget of the government.
So, by the way, the Nifty rates have now started to update. So let's just get the Nifty on the screen, 8350. So good going, up about 0.3% after the solid run that we've had up until now. The good run continues. So Rahul, it's been a secular up move up until now. Are there any pockets or any sectors that you would recommend investors book their profits out of now?
Well, I think some of the rural consumption plays are obviously looking a bit stretched. The auto sector ran up too fast, in my view. And yes, the interest rate cut should help, but I think some of the numbers which are being baked into the FY16, FY17 earnings are on the aggressive side. We have seen a spate of disappointments from the consumer names, almost across staples and discretionary. We have seen disappointments. So that's one segment which is looking like it should take a breather, maybe a long breather at these levels. And that's really the sector I would focus on to take money off and put into cyclicals like banks and maybe even oil and gas.
When you say cyclical and cyclical financials, you include PSU banks, do you?
Yes, I would, but in PSU banks we are more choosy. So we like SBI and BOB, and beyond that, it's a bit difficult because of the capital adequacy requirements which these companies have are massive. So you will have trading kind of rallies in them, but they won't be sustainable because the overhang of the capital requirements which they have for Basel III is quite massive. So therefore, private sector banks are going to be much more sustainable, more sticky picks, if you will, in terms of how one is building up their portfolios.
All right, we actually have a segment where we invite some of our boarders to ask you questions as well. So there's one question that's come in on a money control message board. It is with respect to Ipca Laboratories. Uma Anand from Bangalore has said, what's your outlook on the Indian pharma sector, especially Ipca? And I must mention to you that the stock is down about 11% today on account of some US FDA observations. What would your view be on how to approach that one?
So we don't cover IPCA, so we can't. I can't comment on it specifically. But some of these results obviously have seen the impact of channel consolidation, was resulting in some slowdown in particular companies. So that could build up going forward. And frankly, I think it's on the watch list as could it be another potential consumer sector where you could take out the money over the 6-9 months and put it back into cyclicals? I don't think we are ready to take that call as yet, but definitely the risks seem to be building up on the pharma sector.
Okay. Rahul, one obviously beleaguered sector, beleaguered in terms of balance sheets, is the infrastructure space. We're getting in bits and pieces some incremental good news, and one big one could be the tweaking of the Land Acquisition Act clauses, especially for PPP projects. Anything you will pick from this pack?
We like the roads sector. I mean, that's the only sector we go after, and Adani ports. So roads and ports is one sector where we think there's lots happening. The balance sheets are cleaner. There could be more near-term momentum in terms of the government's readiness to start building again, and therefore these are two sectors I would be more keen on in the infrastructure sector.
Thank you, Rahul Singh. It was a pleasure speaking with you, especially about and read the highlights of your report on the quality of boards. Thank you very much for joining us.